Welcome everyone to Vested Interest. This is Shane. And before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. Just over 100 subscribers now, and the channel continues to grow because of people like you who hit that subscribe button down below, hit that notification bell so you're notified whenever we release any new videos, and join us on this journey to financial freedom. That is really what this channel is about. Today we are going to be doing a portfolio update. Now typically I invest into the portfolio every week. This week was one of those rare occasions that I did not. So I did not add any new capital to the portfolio, but I did add $1,300 that I would typically add to the portfolio. That's pretty much my average there. Sometimes it's a little bit more, sometimes a little bit less, but typically around $1,300 I add every week, or at a minimum bi-weekly whenever I get paid. So again, if you're interested in that kind of content, go ahead and drop a like down below and hit that notification bell, and definitely subscribe to the channel. I don't have a paid Patreon or some other site that you've got to go to log in to see what I'm doing. I cover everything on this channel out in the open, what I buy from week to week, what I sell from week to week, any dividends that were paid out in the portfolio. That is what this video here every Sunday morning is about. So again, join us if you're interested in that sort of thing. You're a dividend growth investor. You want to watch a portfolio get built out over time. I also do a stock pick of the day series Monday through Thursday whenever the stock market is open, to take a look at a stock that I feel is either fairly valued or that I'm watching for it to fall into fair value so that I can add it to the portfolio. Always just my suggestions, never a recommendation to buy, sell, or hold any stocks. I am not a financial advisor. So I'm just an average person who has a day job, a wife and 2 kids, 2 daughters, who invests in their future. And hopefully what I'm doing can be, something that you can look at and say, hey, if this guy who grew up in a double wide trailer can do it, surely I can do it as well, right? I'm not like I said, not a financial advisor. I did not go to school for this or anything. I think if you can read and you can do simple arithmetic, you can invest in your future. All right, so we are going to take a look at the portfolio. Even though we didn't add any new funds this week, we'll kind of walk through what this means. Added $1,300 in cash. This will eventually make its way into the portfolio, but let's get into the video. So we will start with the dividends paid out. On January 3rd, we were paid out dividends, as well as the 4th was $55.61 this week, total dividends. And the first payout was actually from Huntington Bancshares Inc., ticker HBAN. They paid out $27.34 in dividends. I do have the DRIP set on this portfolio. So what happens there, that stands for Dividend Reinvestment Plan. So as soon as Huntington Bancshares pays out those dividends, it automatically goes back in and picks up more shares of Huntington Bancshares. So it bought that 2734, bought 1.93228 shares of Huntington Bank shares. So that adds to the portfolio, even though I didn't add any new capital. The snowball effect now is the portfolio itself is creating income and buying more shares as time goes on. So if I don't put another dime in, this is the result. It will continue to grow. That snowball will get bigger and bigger over time. Obviously, if I don't add any new capital, it'll grow slower. If I add new capital, it'll grow faster. But that is what the idea behind this investing philosophy is. And the next payout was from HP Inc., ticker HPQ. This is out of the information technology sector. And if I did not mention, Huntington Bancshares is a bank out of the financial sector. And HPQ paid out $28.27 on January 4th. And again, DRIP is set up so it automatically went back and bought in more shares of HPQ, which amounted to 1.04669 shares. All total, the portfolio itself created $2.33 in annual passive income, right? Next up, we will talk through what I mean by cash added. So basically what I did is I worked late quite a bit this week and didn't really have time to look at where everything was. Plus, there was a lot of green in the market. I think the market shot up here a little bit. It's in a band, or it hit the lower end of the band, and I think it is rebounding quite a bit. I would call this a dead cat bounce. I think we are still in a downtrending market. I think we will be as long as the Fed is raising rates. They have signaled they will raise rates several more times, at least 2 to 3 more times this year. So I think as they do that, we'll see the volatility we saw last year. The market will drop down, maybe have a bounce back up afterwards. You know, whenever something gets oversold, it does typically maybe trend back up for a little bit, but then return back down the other way shortly after that. So I think that's what we're in right now. So with the stocks that I was looking at to buy for January, that'd be Ally Bank was one, Union Pacific was one, Owens Corning is another, Stanley Black & Decker. All those positions that I'm looking to add for January are currently above my cost basis. So I'm hopeful that next week things go down again. I know that's strange to hear, but I am looking forward to the red again. My portfolio is in the green, a little over 1% now, but I like the red days because it means I'm lowering my cost basis, I'm increasing my yield, and I'm increasing my future potential returns. So my strategy here with this, I'm going to take this 1300, I'll add it to next week's 1300, so be around 2600 I'll put into the market, and I'll hopefully buy some of those shares of those 4 companies that I just listed below my cost basis. If not, there are a couple positions in the portfolio that are down right now still, Verizon being one, Bank of America is another one, Cisco is slightly down. I think there was one other one, I can't recall off the top of my head what it was. But if there isn't a significant pullback in those 4 stocks I'm looking to add, I may add to the other ones that are just down, 5% or more in my portfolio overall. Bring my cost basis down in those positions, even though they're pretty well built out, and that's the only reason I didn't do that now. So I'm holding for a week, put this cash into my bank account. The other reason I was comfortable doing that, my bank currently has a 3.3% yield. I use Ally Bank, so my savings account, that's where I put this money. I slid it over into my savings account, and currently it is yielding 3.3%. So that's not a super great yield, right? It's not beating current inflation, but most of the positions in my portfolio aren't currently beating inflation either. Inflation is obviously high, but at 3.3%, I am getting a nice return. So I'm comfortable leaving it in there for now and collecting that 3.3% return, even though I don't think I'll collect this. $42 would be if I left it, $42.90 would be if I left it in there for a full year. That would be a 3.3% return, right? I don't anticipate that being the case. I anticipate this 1300 going in next week. Now, so if you add the passive income from the dividends paid out, plus if I left that $1,300 in for the year, that would equal $45.23 in passive income. Again, I don't believe that $1,300 is going to stay in cash for a full year, but that's just what the math would be if it happened that way. Now, a quick run through the overall portfolio. Like I said, a lot of green, so my portfolio is up significantly. It's currently, even though I didn't add any, and I'm not counting the $1,300 in cash, since that's sitting in a savings account, not in the actual portfolio itself. So it currently sits at $108,902.69, even though I didn't add anything to it. Like I said, up significantly. Dividend yield has dropped back a little bit, but it does sit over 5%, still 5.050. And even though I didn't add new funds to the portfolio, the annual dividend income, the passive income created by the stocks in the portfolio already paid out in dividends in the form of dividends, annual dividend income did increase, like I said, even though I didn't add new funds, to $5,500.08. And I did not include that $42 and change that I would get off the $1,300 in my savings account, right? So this is just the dividends paid out, that HPQ and HBAN, Huntington Bank shares. This is just from the dividends paid out. That's the only increase I included here. So the sector allocation, sector weights, we'll run through those real quick. Communications is sitting at 9.63% of the portfolio. Consumer discretionary, 8.4%. Consumer staples at 6.37%. Energy is sitting at 8.56%. Financials sitting at 15.36%. Healthcare sitting at 8.94%. Industrial sitting at 2.69%. Technology sitting at 13.23%. Material sitting at 12.99%. Utilities is sitting at 0%. We do not have any utilities in the portfolio currently. REITs in real estate is sitting at 13.83%. No ETFs. I do need to do a video on ETFs. I've had a question on ETFs from one of my comments on one of the other videos I put out. I do have some ETFs that I'm looking at. I'll be honest, one of the reasons I do not currently have any ETFs in my portfolio is I look at their top 10 holdings, right? I feel like what you can do is you can build out your own ETF. That's really what investing is about, versus paying a fee. Even though some of the fees are small, you don't have to pay somebody else a fee to manage a portfolio for you if you want to do the work yourself and keep that fee. All right, that could be thousands of dollars in the future. If you do that, you basically pay yourself to do it. You can build out an ETF, and you can do that by actually looking at, and that's one of the things I'm going to show whenever I finally do a video on ETFs. You can build out an ETF similar to any ETF that you personally like, looking at their top 10 holdings and saying, okay, I'm going to buy, let's say one of their holdings is Apple. Well, I'm going to buy Apple. Microsoft, I'm going to buy Microsoft. Is Tesla in there? I'm going to buy Tesla. You can buy those same holdings in that ETF and create your own ETF and not pay a fee. So that is why I'm so hesitant to put any ETFs in the portfolio, though there are some that I like and may add to my daughter's custodial accounts, because currently I manage theirs as well. And it would make it easier in that instance. I wouldn't have to manage theirs at all. I could just pick out a couple ETFs that I like, put the money in that I'm going to put in anyway, and just sit back and let the ETF do the work and pay that small fee for them. I mean, they've got, my oldest daughter's 10, my youngest is 8, so they've got 8 years, 10 years where the portfolio is just going to sit before they'll ever touch it. And actually, I probably won't even turn it over to them until they're in their 20s, maybe whenever they finish college or vocational school or whatever it is that they want to do in the future. But anyways, annual dividend income, this, in my opinion, is what it's all about. Continues to grow, whether the market's up, whether the market's down, whether the market's floating sideways. This will continue to grow whether I add any new capital to the portfolio or not. As you saw this week, it grew, even though it grew slower. So that is the one thing. If you don't add new capital, it will grow slower, but it will continue to grow. So $5,500.08 in passive annual dividend income. Well, that is really it. I think we rambled our way through this video enough. Hopefully you got some value out of it. Let me know what you did with your portfolio this week. What positions did you add to it? As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell down below. Hit that subscribe button. That's the most important part. Join me on this journey to financial freedom. And drop a comment. Let me know what's going on in your portfolio. What did you add this first trading week of the year? I do personally read and respond to the comments. I'm always interested to read your questions, comments, suggestions, opinions, suggestions for future topics. Go ahead and drop it all down below. Constructive criticism as well. And with that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor. Hey, thanks for stopping by.